Hey everyone, welcome back to the Mark Loeffler Experience. Today we are doing the National Real Estate Market Recap. And this video is brought to you by Catano Loeffler Realty Services. If you're in the Hamilton, Brantford, Burlington, Oakville area, Niagara, and you're looking to buy a home, sell a home, or invest in real estate, please do give us a call. We're happy to help you out. February home sales rise as buyers scoop up the first of 2022 spring's listings. We're seeing this. We're seeing more inventory come on the market nationally. Home sales rose on 4.6% month over month in February. Unsustainable, right? We all know this is unsustainable, that at some point this is going to either level off or dip. Monthly activity came in 8% below last February, and we know that last January, February, March were just insane months. We sold more real estate in the first quarter of last year than we did like the first quarter of the year before. Yeah, there was a little pent-up demand there. And to be honest with you, whoever bought then is looking like a genius right now. I'm seeing people who have bought stuff in August turn around and say, hey, I'm thinking of selling this stuff now because, they've made such a big gain on it. I do know what I'm doing, which is I'm buying out in Edmonton, and hopefully I look like a genius and not like all my other friends who've lost money in Edmonton, but time will tell. Here's the thing. Sales went up 8% from January to February, but listings went up 24%. So that means there was a lot more for people to choose from in February over January, which when we talked in January, obviously the prices went up something stupid from December to January, 10 to 12%. And that's why we're seeing prices slow down, or at least the growth slow down. Right now, we've posted a 20.6% year over year gain, February to February. Not bad, not bad. Rolling 12 months. So as they say, after a bit of a lull in January, I don't know if any of you guys were in the market in January, it didn't feel like a lull. It felt like this thing was going to rip like nobody's business. We were going to get 100% year over year gains, which again, we know is not feasible. It's not sustainable. It's not feasible. Well, let's talk about what drove those home sales in the last quarter. So the top three municipalities with home sales and price growth, it's basically Calgary and Toronto, drove that. Obviously, they didn't have as big a price growth as the surrounding areas over that time. So are they just playing a little catch up, and do they have more to go? Economists see overnight rate ranging from 1.75 to 2.75 by the end of 2023. They're saying basically the market's pricing in 1.75%. It's more likely to be obviously 1.75, which would be 6 raises of the interest rates. And to be honest with you, I don't think we're going to get that many, and I don't think it's going to make a dent in inflation right now. So I don't know. Anyways, so obviously one of the wild cards, which we covered back in January, are any housing policy changes from the federal government. If they become policy, how much that will change what happens. And if you guys want to see that video, I did cover it in depth. We'll link that video down below with our pal Justin. So they are forecasting that we will decline. We'll only sell 612,800 properties this year, a decline of 8.1%. Still the second highest total, bar none, for a long time. They're only forecasting a 14.3% increase on an annual basis. I think they should have revised that because we're almost there already. We had, 10% in December and January. We're up another, 4 or 5 in February. We're there already. You guys want to talk crash, right? We're going to talk numbers on crash coming up. That's going to be another video. That's going to be on Thursday. So make sure you guys tune in and you subscribe so you get notification of when that comes on. Again, we're going to sell fewer homes in 2023. I don't know. There's a whole bunch of people coming to Canada. There's a whole bunch of people forming new households who want to buy, who haven't been able to buy, who are waiting for the pullback. I mean, we did see this with house sales in 2014, 2015. So after, they implemented the stress test, we had a boom in housing sales, and then it fell off. And then obviously it made this miraculous recovery after 2019, 2020, 2021, and 2022. So one of the things they changed in this is that they're seeing that we'll probably not have as many sales as they thought in British Columbia, Ontario, and Quebec, but Alberta and Saskatchewan are going to increase in sales year over year. But as you can see, here's the 10-year average. So 2016 was a peak year, and then they're like, oh, we need to cool this off. Well, they did cool it off. People who bought right there, 2018, pretty smart. 2019 started ramping up, 2020, 2021, and then we're going to see. Maybe we see that little dip again. Like, as you can see, the dip never even went back down to like a 2013 number. Like, this is what they do. They want to cool it off. Okay, we're going to cool it off. I mean, I don't know that they cooled that off, or if, you know, the whole mortgage situation in the U.S. cooled it off. So this is sales activity forecast. As you can see, British Columbia's sales forecast is 23% down. Manitoba, 10% or 12%. Ontario, 10%. Quebec, New Brunswick, pretty much status quo. They're Nova Scotia down 16%. Prince Edward Island, Newfoundland, Saskatchewan up small. And then Alberta's percentage sales up 12%. And then 2023, they're really seeing the loss coming from British Columbia, Ontario, and Quebec, and then the rest will be slightly positive or stable. That's what they're predicting. Now, we don't know. Is it true? Is it not? This is the price gain forecast, which, let's be honest, this is already out the window for 2022. They've got this wrong again, unless we see a correction. Never say never. So 14.3% for Canada, 13% for British Columbia, 8.5% in Alberta, Saskatchewan 2.9%, Manitoba 9%, Ontario 23%, so they're going to lead the nation. We already basically have hit that number. Quebec 15%, New Brunswick 19%, Nova Scotia 18%, Prince Edward Island 8%, Newfoundland 5%. And who knows? I'm hoping that that's more like the 20% that Ontario will get. But, you know, time will tell on that for sure. So Greater Vancouver, surprise, surprise. It's, you know, one of the top 3 major markets in Canada. It's really right at the national average, just a bit over the national average. These markets really drive the averages in Canada. Like, they represent, between Vancouver, Toronto, and Montreal, they represent probably 70% of the market. And so we got Calgary coming in at 16%. See, Edmonton, only 7% year over year. But by the way, I'm just going to share this with you. If I can get 7% year over year price increases for the next, 5 years, I'm really happy with that. I don't need or want to see, at least at this point in my buying in Alberta, 100% price increase, because that throws out my numbers like you wouldn't believe. I can't make things work at that. So I just want a nice steady growth. My plan is 5 to 7 years there. So that would give me this, and that's what I'm hoping for. And by the way, they're trying to tell us it's supply, and it is supply, but obviously there's been a lot of money printing, and money is flowing into these assets because we're seeing a lot of inflation. And these inflation numbers are like, they're not small, 10%, right? So when you see that and you take out inflation out of there, which is probably really 15, 16%, like, we're really seeing house prices go up 4%. It's just not keeping up with wages in Canada, because wages aren't keeping up with inflation. Why? Because inflation is a tax. All right, let's check out Regina, only up 4.7. So the prairie provinces are not doing well, but in my opinion, I'm thinking that they're going to do better in the coming years, because what do they have? Oil, agriculture, they have commodities, right? And commodity prices over the next couple of years will be very, very strong. This is my bet right now. This is what I'm betting on. Winnipeg, they're up 13.5%. And we saw that market was slowing a little bit last month, right? When we did the numbers. So Windsor, 30% year over year. Congratulations, everyone investing right out there. Geez. Let's see Durham. 37% increase year over year. Again, these are insane numbers. See, for my buddy, the king of Sarnia there. Sarnia only went up 13%. Probably why people can still buy out there at a reasonable price. Sudbury, for all my friends investing up there, 40%. We have a winner. Ding, 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 ding. Let's check out Peterborough. I know that was hot. 33.5. Let's see Cornwall. Cornwall, 28.6 for everyone who bought out there. Hamilton, Burlington, 33.4. London, We'll do London, Barrie, Toronto, and then we'll move off. Oh, here you go. New winner, 41.2% year over year. That's nuts. I just don't understand this sometimes. 37.8% in Barrie, 36% in Greater Toronto. I mean, that's a huge number. Like, because the average price was just under $1 million, and now it's 1.34 million. So 36% when your average price is $1 million. It's a big number. When you go from, what was that? That was London. I mean, they were at 5 something and they went to 750. Still a big number. Like, don't get me wrong. Like, the increase here is what? $370,000? 50% of that London price. I'm just putting it out there. Like, the increase was what the average sale price was in Sudbury last year. Just putting those things out there. Let's see Oakville. I don't think this, again, that's a big number. Oh, so Oakville's up 40% too. And these are big numbers. It's $500,000 in a year. Absolutely redonkulous. All right, let's check out Montreal, 20.3, right at the national average. That price increase that was happening in Oakville area, Halton area, literally, look, it's the same price as, so you could have bought a house last year in Oakville at this time, sold it, and moved to Montreal for free. That average house to average house. Just going to put that out there. Let's check out little Halifax, 33.5%. So what does all this mean, right? Like, why do we look at this? Well, as an investor, I want to know what markets I can get into that have affordability, that obviously have cash flow. So I know a lot of people who are Ontario investors are moving down to the States, or moving out east, or like me, they're moving out west. Well, number one, landlord-tenant rules are more friendly in most other places. Number two is we can actually get cash flow on properties and run a successful real estate business, where it's right here, right now, what you have to do is all speculation. So you guys let me know what you guys think. If we're going up, we're going down, or if we're gonna tread some water. That's been your February recap for Canadian real estate investment. Hope you guys enjoyed. Catch you next time.